Given the price history and forecast for Bitcoin, a long-term investment strategy appears to be the most suitable approach. While the recent price action has shown some volatility, the forecast suggests a gradual upward trend over the next week. This indicates a potential for sustained growth in the long run. Therefore, a long position in Bitcoin is recommended with an entry price around $62,300. This price point offers a good balance between capturing potential upside and mitigating risk. A stop loss should be set at $61,860.23. The support price, to protect against significant downside movements. Target price can be set at $64,300, the highest projected price in the forecast, allowing for a healthy profit margin. This strategy allows for capital appreciation over the long term, while managing risk effectively. Based on the provided Ethereum price data, a cautious medium-term investment strategy appears most suitable. The 2-week price change shows a period of consolidation and slight decline, while the forecast suggests a modest increase in the coming week. The support price of $2,370.34 indicates a potential floor for the price, while the resistance at $2,582.41 suggests an upper limit for short-term gains. Considering this context, a long position is recommended for a medium-term investment horizon. An entry price around $2,400 would allow for capturing potential upside while mitigating risk. The stop loss should be set at $2,375 to protect against unexpected downward movements. Target price could be set at $2,500, aiming to capitalize on the forecasted price increase and staying below the significant resistance level. This strategy balances the potential for moderate returns with a manageable risk profile, aligning with a cautious medium-term investment approach. Solana shows a slight downward trend over the past 2 weeks. However, the forecast suggests a slight upward correction in the coming week, stabilizing around $145. Considering the current price hovering around $143 and the support level at $138.91, a long position appears to be a potentially profitable strategy. To execute this strategy, we can enter a long position at $142, placing a stop loss at $139 to minimize potential losses. Our target price should be set at $148, aiming to capture the potential upside movement towards the resistance level of $146.54. This strategy capitalizes on the anticipated short-term upward correction, while managing risk through a well-defined stop loss. Based on the provided Ripple price information, a cautious short-term investment strategy is recommended. The historical price data shows a recent downward trend, and the forecast suggests further declines in the coming week. While the support price offers a potential floor, the resistance level indicates a significant barrier to upward movement. Considering this outlook, a short position on Ripple appears to be the most suitable strategy. An entry price around $0.532 would allow for capitalizing on the anticipated price decline. A stop loss could be placed at $0.538 to mitigate potential losses if the price unexpectedly rises. The target price should be set at $0.524, aiming to profit from the projected drop towards the support level. This strategy prioritizes risk management while seeking to capitalize on the prevailing bearish sentiment surrounding Ripple. Based on the provided Cardano price information, a cautious investment strategy for the medium term appears most suitable. The historical price data shows a recent downward trend, with the price hovering around the support level of $0.3463. The forecast suggests a slight upward movement, but the price is expected to remain relatively stable in the short term. This indicates a lack of strong momentum in either direction. Therefore, a medium-term long position is recommended. An entry price around $0.348 could be considered, allowing for some room for price fluctuation. The stop loss should be set slightly below the support level at $0.345 to minimize potential losses. The target price could be set at $0.358, aligning with the recent resistance level. This strategy allows for potential gains while managing risk by taking advantage of the potential for a moderate price increase in the coming weeks. Given the price trends and forecast for SU, a medium-term investment strategy appears most suitable. The historical prices demonstrate an overall upward trend, with recent fluctuations suggesting consolidation. Forecast indicates continued upward momentum, with prices projected to reach around $2.08 in the coming weeks. This suggests a bullish outlook for SU in the medium term. Therefore, a long position is recommended to capitalize on this potential price increase. An ideal entry price would be around $1.88, aligning with the current price and offering a good risk-reward ratio. A stop loss should be placed at $1.79, below the recent support level, to limit potential losses. The target price could be set at $2.05, slightly above the highest projected price in the forecast, allowing for a healthy profit margin. This strategy allows for a medium-term holding period, allowing the investment to benefit from the anticipated price appreciation, while managing risk through a well-defined stop loss. Given the price trends and forecast for Filecoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $3.498. The forecast suggests Filecoin might continue to decline slightly in the coming week, reaching around $3.52. The resistance level of $3.726 indicates that a significant upward movement is unlikely in the near term. Therefore, a short position seems more suitable to capitalize on the potential for a price decrease. An aggressive short-term investment strategy could involve an entry price of $3.65, aligning with the current price and the forecast. The stop loss should be set at $3.7, slightly above the current price, to protect against unexpected price surges. The target price could be set at $3.4, allowing for a reasonable profit margin while staying below the support level. This strategy aims to take advantage of the short-term bearish outlook for Filecoin. Given the price trends and forecast for ThetaNetwork, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend, with the current price close to its forecast and near the support level of $1.204. The resistance is at $1.336, indicating that there is limited room for upward movement, considering the downward trend in the forecast. A short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $1.29 would be ideal, aligning with the forecasted price. The stop loss should be set at $1.31 to protect against any unexpected price recovery. The target price should be set at $1.20, slightly above the support price, allowing you to take profits before the market hits major support at $1.204. This strategy allows for potential profits from the anticipated price decline, while managing risk with a well-defined stop loss. Given the historical price data and the provided forecast for Dogwifhat, a moderately aggressive investment strategy would involve a long-term approach. The historical prices demonstrate a consistent upward trend, punctuated by periods of consolidation, while the recent price action has seen some pullbacks. The forecast suggests a continued upward trajectory over the next few weeks. This indicates a bullish outlook for Dogwifhat in the medium to long term. Therefore, an investment strategy for Dogwifhat should involve a long position. A suitable entry price would be around $2.40, allowing for some buffer below the current price. The stop loss should be set at $2.25, providing a cushion against significant price drops. Target price could be set at $2.80, aligning with the resistance level and the forecast's projected high. This strategy allows for potential capital appreciation, while managing risk through a well-defined stop loss. Given the price trends and forecast for Stellar, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent consolidation period, with the current price hovering near the support level of $0.0897. The forecast suggests a slight downward movement in the coming days, indicating potential for further consolidation or a minor dip. Therefore, a short position could be considered to capitalize on this potential dip. An entry price around $0.0915, slightly above the current price, would allow for a small buffer against any unexpected upward movement. The stop loss should be set at $0.0925, protecting against a potential surge in price. The target price could be set at $0.0898, aligning with the support level, allowing for a modest profit if the forecast holds true. This strategy emphasizes risk management and capitalizes on the anticipated short-term price fluctuations. Based on the provided historical price data and the forecast for Starknet, a short-term investment strategy appears to be the most suitable approach. The historical prices show a slight downward trend, with the recent price hovering around $0.39. The forecast suggests a continued downward movement, with prices potentially dropping to $0.395 in the coming week. This bearish outlook, coupled with the support price at $0.3748, indicates a potential opportunity to enter a short position. Therefore, a short-term investment strategy focusing on a short position is recommended. An entry price of $0.395 aligns with the predicted price drop and offers a margin for error. The stop loss should be set at $0.407 to protect against any unexpected upward movement. The target price should be set at $0.37, slightly above the support price, allowing for potential profits before reaching the potential floor. Given the price trends and forecast for Pendle, a cautious investment strategy would focus on a short-term approach to navigate the anticipated price fluctuations. The historical prices demonstrate a mixed trend, with recent fluctuations around the $3.8 range. The forecast suggests a slight downward movement, but the support price at $3.722 provides a potential floor for the price. Considering the limited upside potential and the possibility of further declines, a short position seems more suitable. An entry price of $3.85, slightly above the current price and close to the resistance level, would allow for a potential profit if the price dips towards the support level. The stop loss should be set at $3.9, protecting against any unexpected price surges. The target price could be set at $3.75, aiming to capture a modest profit while avoiding excessive risk. This strategy emphasizes risk management and capital preservation, taking advantage of the anticipated price dip while minimizing potential losses. Based on the provided information for Render, a cautious investment strategy focusing on the short term appears to be the most prudent approach. The recent 2-week price history exhibits a downward trend, with the forecast indicating further declines over the next week. Price is currently hovering near the support level of $4.751, suggesting that the downside risk is relatively high. Given this bearish outlook, a short position would be more suitable to capitalize on the anticipated price decrease. An entry price of $5.20 would allow you to enter the short position at a price slightly above the current market value, mitigating the risk of immediate losses. The stop loss should be set at $5.40, above the recent price highs, to protect against any unexpected upward movements. The target price should be set at $4.90, aligning with the support level and allowing for a potential profit before the price potentially rebounds. Given the price trends and forecast for VeChain, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.02197. The forecast suggests VeChain could potentially stabilize around $0.0224, indicating a limited upside potential in the near term. However, the price is also close to a potential rebound, making a short-term investment with a defined risk management strategy worthwhile. Therefore, a long position is advisable, aiming to capitalize on a potential price increase towards a resistance level of $0.02326. An entry price of $0.0225 would allow you to enter the market near the current price, with a stop loss set at $0.02197 to minimize potential losses. If the price drops below the support level, the target price should be set at $0.023, allowing you to take profits before the price reaches the resistance level. This strategy allows for potential gains while managing risk effectively in a volatile market. Based on the provided information about Binancecoin, a medium-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend, with recent fluctuations suggesting a potential consolidation phase. The forecast indicates a slight upward movement, but the range is relatively narrow, suggesting limited potential for significant short-term gains. Therefore, a long position is recommended, aiming to capitalize on the potential for a gradual price increase. An entry price of $565, slightly below the current price, allows for a margin of safety while capturing potential upside. A stop loss at $563. The support price protects against potential downside risks. Target price should be set at $573, aligning with the forecast and providing a realistic profit target. This strategy balances risk and reward, aiming for moderate gains over a medium-term horizon. Given the provided historical price data and the 1-week forecast for Conflux, a cautious investment strategy focusing on the short term seems most appropriate. Price history shows a volatile period with fluctuations around the $0.170, $0.190 range, while the forecast suggests a slight downward trend. Price is expected to remain within a similar range. Therefore, I recommend a short position with an entry price around $0.180, aiming to capitalize on a potential dip towards the support level of $0.1589. The stop loss should be set slightly above the entry price at $0.185 to minimize potential losses. The target price could be set around $0.165, anticipating a moderate decline within the forecast period. This strategy prioritizes risk management while seeking modest gains from short-term price fluctuations in Conflux. Based on the provided price information for Worldcoin, a short-term bearish strategy appears most suitable. The 2-week price change shows a downward trend, and the 1-week forecast suggests further declines. The historical prices indicate a potential support level around $1.85, while the resistance is at $1.948. Given this outlook, entering a short position at $1.93, near the current price and the resistance level, could be advantageous. A stop-loss order should be placed at $1.95 to limit potential losses. If the price unexpectedly rises, the target price could be set at $1.85, aiming to profit from the anticipated price decline towards the support level. This strategy capitalizes on the short-term bearish momentum while managing risk with a well-defined stop-loss order. Based on the provided Avalanche price information, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history reveals a slight downward trend, while the forecast predicts a period of consolidation around the $27 price level. This suggests a period of sideways movement with limited upward or downward momentum in the near term. Considering this outlook, a long position could be initiated with an entry price near the support level of $27.28. The stop loss should be placed slightly below this level, around $27.00, to minimize potential losses. A target price of $29.00, slightly above the resistance level of $30.52, offers a reasonable profit potential while acknowledging the possibility of further consolidation or a slight retracement. This strategy allows for capital appreciation if Avalanche breaks above the resistance level, while the stop loss protects against significant downside risk in case the price declines further. Given the price trends and forecast for Jupiter, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $0.7035, suggesting a potential floor for the price. However, the resistance at $0.8691 indicates a significant hurdle for any upward momentum. Considering this, a short position is recommended to capitalize on the anticipated decline in prices. An entry price of $0.768, near the current price and above the support level, would allow for a modest profit margin. The stop loss should be set at $0.79, slightly above the entry price. To limit potential losses, the target price could be set at $0.727, aligning with the forecast and below the support level, allowing for a reasonable return on investment. This strategy allows for a short-term gain, while mitigating risk by setting a stop loss and targeting a price point below the support level. Given the current price trends and forecast for EOS, a cautious investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast indicates further declines in the coming week. The price is currently hovering near its support level of $0.4567, suggesting a potential for further downward movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.470 would be suitable, allowing you to enter the short position before the price potentially drops further. The stop loss should be set at $0.480 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.450, aiming to capture a decent profit before the price reaches its support level. This strategy focuses on a short-term investment horizon, taking advantage of the anticipated price decline in the near future. Given the price trends and forecast for TRON, a short-term investment strategy appears promising. The historical prices show a slight upward trend, but the forecast indicates a period of consolidation and potential sideways movement. The current price is near the support level of $0.1577, suggesting a potential bounce. However, the resistance at $0.1605 might prevent a significant upward breakout. Therefore, a short-term neutral strategy is recommended. Enter a position at $0.158, with a stop loss at $0.156 to protect against a potential drop below the support level. The target price should be set at $0.161, aiming to capitalize on the potential for a short-term rally towards the resistance level. This strategy allows you to participate in the potential upside while managing risk effectively. Based on the provided data for SHIB, the 2-week price change suggests a downward trend, with the forecast indicating further declines. The historical prices show a downward movement, reaching a low of $0.397. However, price has been fluctuating around the support level of $0.4332, indicating potential buying interest. The forecast suggests a range between $0.436 and $0.453 for the next week, with a slight upward bias. Considering these factors, a short-term investment strategy with a neutral to slightly bullish outlook is recommended. An entry price around $0.438 would allow for capturing potential upward movement within the forecast range. A stop loss should be placed at $0.428 to protect against further downside, while a target price of $0.450 could be set to capitalize on the forecast's upward bias. This strategy aims to profit from short-term price fluctuations within the predicted range while managing risk effectively. Based on the provided ShibaInu price history, forecast, and support resistance levels, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent consolidation around the $0.000170 level. While the forecast suggests a slight downward movement, price remains close to the support level of $0.000167. This indicates potential for a short-term bounce before continuing the downward trend. Therefore, a short position with a stop loss at $0.00000181, slightly above the current price and resistance level, is recommended. This strategy aims to capitalize on a potential price dip towards the support level. The target price should be set at $0.00000167, aiming to capture a reasonable profit before the price potentially finds support. This approach allows for risk management while capitalizing on the anticipated short-term price movement. Based on the provided Dogecoin price information, a cautious investment strategy focusing on the short term appears most suitable. The historical price data demonstrates a fluctuating trend with a recent downward movement. The forecast suggests a continued decline in the coming week, with prices potentially falling below the current support level. This bearish outlook, coupled with the relatively low entry price, presents a potential opportunity for short-term profit. Therefore, an investment strategy involving a short position on Dogecoin is recommended. A suitable entry price would be around $0.107, aligning with the recent price action and the forecast. The stop loss should be placed at $0.111, slightly above the current resistance level, to limit potential losses. The target price could be set at $0.105, aiming to capture a modest profit before the price potentially reaches the support level. This strategy prioritizes risk management while capitalizing on the anticipated short-term price decline. Given the price trends and forecasts for HookedProtocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.4294. The forecast suggests a continued decline in price over the next week, with the lowest predicted price being $0.423. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decrease. A suitable entry price would be $0.436, aligning with the first forecast price. The stop loss should be set at $0.44 to protect against any unexpected price surges. The target price should be $0.423, the lowest forecasted price, allowing you to take profits before the market potentially hits major support. This strategy aims to minimize risk while maximizing potential returns in the short term. Given the price trends and forecast for Aevo, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $0.329. The forecast indicates a further decline in price, suggesting potential for short-term profit. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $0.338 aligns with the current price and the forecast. The stop loss should be set at $0.346 to protect against any unexpected price surge. The target price should be $0.32, aiming to secure profits before the price reaches the support level. This strategy allows for a potential short-term gain while mitigating risk through a well-defined stop loss. Based on the provided historical price data and the one-week price forecast for Notcoin, a short-term bearish strategy appears to be the most suitable. The historical prices show a downward trend over the past 2 weeks, with the forecast suggesting further declines. The current price is hovering near the support price of $0.007349, indicating a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, around $0.00741. The stop loss should be set slightly above the current price, at $0.00753, to limit potential losses. The target price should be set at $0.00715, aligning with the lowest price point in the forecast and allowing for a reasonable profit margin before the price potentially bounces back. Given the price trends and forecast for Suncoin, conservative investment strategy would focus on a medium short-term approach. The historical prices show a downward trend with recent fluctuations around $0.019. The forecast indicates further declines, suggesting Suncoin could drop to $0.0165 over the next week, while the support price sits at $0.01893. The resistance is at $0.02005, indicating limited upward potential. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.0195 aligns with the current price and the forecasted price trajectory. The stop loss should be set at $0.02005 to protect against any unexpected price surge. The target price should be set at $0.0170, allowing you to take profits before the market reaches the major support level. This strategy allows for a balanced approach, aiming to profit from the anticipated price decline while managing risk effectively. Based on the provided Pepecoin price information, a short-term investment strategy appears most suitable. The historical price data shows a general downward trend over the past 2 weeks, with the forecast indicating further declines. Although the price has shown some fluctuations, it remains below its resistance level. This suggests a potential opportunity to capitalize on the downward momentum. Therefore, an aggressive short-term strategy would involve entering a short position at a price slightly above the current market price, around $0.0000980. The stop loss should be set at $0.0001020 to limit potential losses if the price unexpectedly rises. The target price would be set at $0.0000912, aiming to capture a significant portion of the anticipated decline. This strategy leverages the bearish short-term outlook and aims to profit from the potential price drop towards the support level.